The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Well done, all of you. You've made it to Friday. You haven't made it through Friday yet, but you made it to Friday, and that's a start, isn't it? And you're watching Scorebox, and that's another start. And you've got Karen Cho, so what more do you want? And myself, Steve Sedgwick. I know you want headlines. Let me do that. So the Dow jumps over 300 points. It climbed now for 7 straight sessions. Softer than expected jobless claims, raising hopes once again for rate cuts this year. Now, on this side of the Atlantic, the Bank of England holds rates steady in a 7-2 split, with markets raising their bets on a June cut. Governor Andrew Bailey tells me that rate decisions won't be influenced by a UK general election likely this year.
We can take these judgments with a longer term horizon, and we can take them independently of any other cycle that's going on around us, including the electoral cycle.
Chinese EV firm Zeekr has reportedly priced its New York listing at the top of its range in what could be the biggest Chinese debut on a US exchange in almost 3 years. Israeli Prime Minister Benjamin Netanyahu vows to stand alone if necessary, pushing back against a warning from US President Joe Biden not to invade Rafah.
If we have to, we will fight with our fingernails. But we have much more than fingernails. And with the same greatness of spirit, with God's help, we will win together.
All it took was another dose of data to get the market going. Now 7 straight sessions to the upside for the Dow and back in the green for the S&P 500 and for the Nasdaq. The data yesterday, jobless claims, we mentioned in the headlines, that unemployment level. The market's been looking for a little bit of weakening in the job market, and it was coming through in the data point yesterday. Jobless claims rising to their highest level since August. So again, bringing back hopes that perhaps there will be a backdrop for interest rate cuts this year. 10-year Treasury auction also well received, driving that yield lower. So we saw 2 different parts of the market, from equities to bonds, just getting positive information enough to produce some encouragement. In terms of the performance now that we've seen from the major markets this week, it's not been a bad one. We've seen the likes of the Dow before we trade today up 1.8% for the trading week, 1.7 up for the S&P 500 and more than 1% for the Nasdaq. So positive across the board. If you look at sectors that have been some of the positive ones this week, utilities, that's been very much leading the charge, up more than 4% for the trading week. FANG Plus stocks up about 0.8. I'm going to take you to what we're seeing now on the Treasury market. A quick look at that trade, and you can see we have got 4.46 on the 10-year, and as a result, 4.8 on the 2-year. The dollar, this is the trade across on foreign exchange markets. We are travelling a little bit stronger on dollar on major pairs. You can see this one in 125.12 on sterling dollar. To the Asian markets, the early trade looks like this. We've got Japanese stocks tracking a little bit firmer, much stronger on the Hong Kong market. Shanghai trades down 0.2%. Steve.
I'm just chatting to Adam. He's always run off. He's so scared. I'm just chatting to Adam, the director, about how long I'll take. You can come on telly, Adam. You're a good-looking chap. Better looking than me. Right, OK, so as Karen mentioned, it was all about the data, actually. And the US, I kind of don't want to get so carried away as some of you, I've got to be honest, as is my want. So I'll go through what this says. US weekly jobless claims jumped to their highest level since August. Now, that on the surface seems pretty interesting, doesn't it? August last year, with 231,000 Americans filing for unemployment benefits. That's higher than forecast, unambiguous. Continuing claims increased to 1.78 million. That is up by 17,000 versus the previous week. But, and again, I'm sorry if I'm a curmudgeon. I don't want to pour cold water on your hopes of a rate cut. I'm just tempering your exuberance, okay? The 4-week average actually fell. And look, we have to smooth out this data. We can't just go 1 week up, 1 week down. But the 4-week average actually fell to 1.78 million as well, all right? From 1.8 4 weeks earlier. So if you look at the smooth 4-week average, it's still not giving you the picture that you want to see for rate cuts. Just saying. Okay. Meanwhile, San Francisco Fed President Mary Daly said it may take, again, same old thing really, isn't it? It may take more time to bring down inflation to the central bank's target.
Inflation's going to be a bumpy ride. It's going to come down rapidly sometimes, maybe get stubborn in 3 months. And before we can jump to the conclusion that, if we had jumped to the conclusion last year that we were on a downward trajectory and everything was golden, I think you've probably heard all of us, but me, I said it repeatedly, we can't declare victory. It's far too early to declare victory. And the 3 months that we've just seen is why you don't declare victory before you get confidence.
Goldman Sachs President and COO John Waldron said a soft landing is still possible, but that he is concerned about US government spending.
We're still subscribers to, generally speaking, a soft landing scenario. I would say soft landing doesn't mean everything is perfect and it lands very soft on a nice pillow. Sometimes you have a little bit of fits and starts in a soft landing, and I think that's kind of what we're seeing right now.
I was taken by comments you made at a Semaphore conference in April about the debt and demand for Treasury auctions and leverage in the Treasury system and looking at the UK trust budget as a cautionary tale. Can you expand a bit on that? How serious, how much do you see rhyming between the US and an episode like that?
Well, what I was referring to is the absolute stock of Treasury in the marketplace today has grown considerably. The U.S. government continues to spend. I would argue both parties are showing very little discipline in the context of spending and fiscal stimulus in the economy. Now, fiscal stimulus was needed when we were coming out of the pandemic, but I think we went too far and we continue to go too far. And I think that while we are the reserve currency and we have the ability to benefit from being the reserve currency, we should not abuse that privilege. And I think at this point we're getting to a place where it's getting riskier. We have very low unemployment and yet very high fiscal spend. Were we to have higher unemployment and we actually need more stimulus, we may have less running room. And you're very reliant now with less buying of foreign governments of U.S. Treasury stock. You're very reliant on the U.S. households to continue to fund the U.S. Treasury. So we worry about the validity and veracity of these auctions. We worry about whether U.S. households will continue to buy, and we worry about the price that they will demand to continue to buy. And I think that I just wish the government on both sides of the aisle would pay a bit more attention to that.
Interesting to hear those concerns about spending patterns, because we didn't see any concerns on the auction yesterday on Treasury's yield actually declining. But our US colleagues will be speaking more to Fed policymakers later on today as we continue our focus on monetary policy as well. Tune into the interview with the Minneapolis Fed President Neil Kashkari and Chicago Fed President Austin Goolsbee tonight at 8 p.m. CET. So I guess we can do your thumbs up, thumbs down by Monday again.
We're not going to do anything new. They can't, not without the data. My dirty little secret, which I revealed this time after the last Bank of England.
Right. About the locket and how peaceful it was. It's like a day spa for you.
So I've even brought my copy for you to read.
Thanks.
If you want, I've got.
Thanks. That's great.
I've
what
got
a gift.
the 85 pages, which I've marked up, literally the whole thing of the monetary policy report. I've got you the fan charts. How
right.
lovely am I? Am I the best buddy ever?
You are.
I've got you the monetary policy summary from the 8th meeting. I've got you the conditioning assumptions forecast summary and indicative projections from May 2024. I don't even know what this one is. It's not even labelled.
Is that a bit of biscuit on the top one?
Is it a bit of biscuit
crumb?
No, funnily enough, I was the only person in there who didn't eat the Bank of England biscuits. I didn't want to be bribed. No, they're all right. They're nothing special. But it was genuinely interesting because you have 2 hours in this lock-in where you can't do anything. No devices.
Sounds blissful.
It was quite nice.
Spa for economic nerds.
Oh, there were a lot of economic nerds in there. They're all kind of, wonks.
Yeah.
They all knew what they were doing, apart from me. The Bank of England held rates steady in a 7-2 vote, with the Deputy Governor Dave Ramsden joining external MPC member Swati Dhingra in voting for a 25 basis point rate cut. Governor Andrew Bailey says the bank rate would likely need to be cut more than markets expected in coming quarters, whilst describing a June cut as, quote, neither ruled out nor a fait accompli. Now, markets raised their bets on the BoE cutting in the wake of the decision, now seeing a 47% chance of a rate cut in June, so we're pretty much 50-50, aren't we? And 58 basis points of easing in 2024. That is up from around 53 immediately before the decision. I sat down with Andrew Bailey and began by asking him what evidence he needs to see before backing a rate cut.
We've highlighted three things, really, and what those three things have in common is that they really sort of underlie our judgment on how persistent the inflationary shock that we've been through, obviously, in recent times is going to be. So the three things are services inflation, which of course is still around 6% on the latest numbers, private sector wages, and the state of the quantity side of the labour market. They're all good indicators of that. Now, we made an important change in the report we published today and the forecast we published today that we have actually reduced what we think is the sort of the degree of persistence going forward. So in other words, inflation, we think, will come down a bit faster and a bit more. And that's important. Now, to your question, what I want to see is, in a sense, is the sort of the evidence now starting to pile up to back up that judgment. That's what I'm looking for.
But it's slow progress, isn't it? It's slow getting to target. CPI, both at the headline and at the core level, is persistently, annoyingly high compared to where we would like to see it. I know you think we're going to get CPI down to 2% in the second quarter, but you want to see that sustainably as well. Are you going to have enough evidence in the next two CPI figures for June to be in play?
Well, let me say this. I mean, a year ago, exactly a year ago, I think we'd have bitten our hands off to get this profile of inflation, because we were not that optimistic a year ago, because we thought that we'd been through such a difficult time that we were going to have more persistence, it would get more embedded. We were still raising interest rates at that point. So I think we need to put it into that perspective. I think it's important just to have that in mind. I'm not going to say it's not the way we're going to do it. We're evidence-based, so we're not going to say it's going to be this meeting, it's not going to be that meeting, it's going to be the other meeting. Each meeting we come along, again, and reassess the situation. But I think what we have to do, and I hope we have given, is a roadmap of what we're looking at and how we're looking at it.
The traditional theory goes you solve inflation before you worry about recession. But are there worrying indicators that even though recession has abated for now, that the consumer, the key part of the economy, your agents, as we said on page 62, box E of the monetary report, they're worried about what they're seeing on the consumer front?
Well, I think, let's put this into perspective. Actually, all the evidence we've got and it's gone into formulating our view on what we think the growth number is going to be for the first quarter, which is going to come out tomorrow, so it is a very short time horizon on that one. But actually, looking beyond that, a somewhat stronger growth picture. And I do think, the first quarter has been encouraging in that sense. Now, you're right to have alighted on the box because our agents, and this is why the agents are so valuable to us, they've come to us and said, look, you just need to know our contacts are not as optimistic as those survey numbers would suggest. We have to balance that off, which we've tried to do, and we'll see.
Well, I'm delighted to say we've got an expert voice on this one now. Modupe Adegbeng joins us, who is economist at Jefferies. Nice to see you. Thank you very much indeed for joining us so early.
Thank you for having me.
Well, just a really easy open question. What did you think of the Bank of England yesterday?
So I think not too many surprises. Yeah. The vote split was slightly more dovish than we expected, but really from David Ramsden's speeches, we kind of knew that he was looking at potentially voting for a cut at this meeting. But I think one of the other takeaways for us is that the BoE still remains quite cautious, though I do think they are getting much closer to being in a position where they're ready to cut.
Yeah. Well, I don't think it's a silly question or not, but I'm going to ask it. What harm is there in starting the gun or firing the gun in June when, as Ben Broadband and Brett Bent and all of them been saying, it's still going to remain restrictive, even if they cut 25 basis points as well. And there are tensions in the economy. Again, from my boxy blah, 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 their agents don't know why the consumer's struggling so much. I mean, anyone with common sense can work out why the consumer isn't spending. I mean, you can give 10 very good reasons, but their agents are unsure. And it says here, unsure as to the reason. That's what I raised with the governor. What harm is there in being really restrictive to mildly less restrictive?
So I don't think there's necessarily a lot of harm in doing that, but I think from the bank's perspective, they were really caught short-footed as inflation rose. And so I do think they are still quite worried that inflation, even though it's come down quite significantly, so it's now standing at 4%, they are quite worried that actually, even if they start to cut interest rates at the moment, it may not come down to target. And so I think their fear of inflation persistence is what's holding them on for maybe a little bit longer than they even need to be on interest rates for as well. So I think it is that fear.
If you look at the 2-year forecast, inflation is seen falling to 1.6%. That is below target. So in the time frame that they're forecasting, there is a chance that inflation will undershoot. How do we marry that with the short-term concerns about not getting back to target?
Yeah, no, definitely. I think it does seem quite inconsistent in some senses that you have this fear in the short term of inflation persistence, but in the long term, they expect inflation to fall below target. But what I'd say there is that the the BoE's MPC likely wants a lot more information about the kind of evolution of inflation. So I think one of those key metrics that they haven't yet seen is around wages. So wages are still running at 6%, and the BoE agent survey also indicate that they expect wages to fall back, but they haven't got that raw and I guess hard evidence that wages have come down. And so I think as they start to get that information, they'll be ready to cut.
So perhaps a question to both of you. Growth. So when I was talking to the ECB the other week, the bulk of members over at the ECB, one thing that kept cropping up for some of the dovish candidates was that growth fading and just how weak that growth profile was starting to look across Europe was one of the catalysts to really get some encouragement towards getting towards cutting in June and thinking what happens beyond June. Do you think there was a hint of that from Andrew Bailey yesterday? Do you think he was really giving a nod to the growth profile in the UK?
Well, I mean, I can tell you on page... Where am I? Here we go. I can't even find my page now. But anyway, growth assumptions went up.
Right, so they're not as concerned.
And they're now talking about a lot... I mean, Madupe knows better than I do, but it was interesting that actually they were quite relaxed about the growth scenario, weren't
No, absolutely. I think they were quite relaxed about the growth side, and I mean we'll get the provisional figures for Q1 in about an hour. In fact, less than an hour, exactly. I think. Yeah. And I think they're expected to be around 0.4%. So that's quite good growth. Of course, it comes from the shallow recession that we had at the end of last year. But overall, the BoE did upgrade their growth profile for this year and for next year. So I think the BoE is less worried about the economy stagnating or slowing as much as the ECB are at the
Present
moment.
for you, page 7.
Oh, thank you.
It's all there.
There's a little circle on it and a couple of underlined
As
parts.
if Madupe hadn't already done it, but yes. But for next year, 0.9%. I mean, when we're talking meagre fare compared with the US, though.
Absolutely. So not stellar, but I think less worry of stagnation.
But that's a good thing too if you want to see the heat come out of the services side of the economy, that if it's hot enough but not too hot, I mean, that's certainly welcome. In terms of what we're seeing from the two different members, I mean, you were setting this up yesterday very nicely, that you get 2 that vote for a rate cut. Will it be 3? We didn't get the 3, but when do you think the bulk of the members...
Called it, didn't we?
Right, but when do we think we get more members shuffling towards the cut scenario? Is that June?
I think in June. So our base case, I should say, is that we expect the BoE to cut in August, but I do think it's a very, very close call between June and August. And so I do think in June we're likely to see a lot more members shuffle into that rate cut camp.
I'm a great one for not taking one piece of data, but or seeing a greater trend. I think it's really important. But these next 2 CPIs, we're all economics geeks in some ways. Really exciting. We've got one week after next, May 21st, I think it is. And then we've got another one on the 19th of June. Once they've got those 2 pieces of information, if they behave, June gets exciting because, now let me get this right, the MPC in June is on like the 20th, I think, but the CPI is on the 19th. And they'll get a look at it, I think, a day or so early as well. So they'll be ready. So I think we could very easily be on at least a 6.3, but maybe a 5.4 either way for that June meeting.
No, exactly. I think it makes for a very, very interesting meeting. And when you look at the BoE's forecast as well for the April and May CPI numbers, they are looking very, very close to 2%. One of them is dipping below at 1.9%. So that does seem like it'll be a very, very close meeting in June.
One of the lines from yesterday, the big global shocks that drove up inflation have faded. Do we agree that some of those shocks have faded? Because we're still watching the geopolitics, right, in the Middle East. And a lot of the central bankers are still concerned that there's a wild card that, and this is from the ECB's perspective, that steers them off course in June. Same factors, of course, going to be in play for the BoE. So do we think that we can actually say, look, global shock done, that's behind us?
I think it's really hard to say that, we won't see any more shocks, but we can certainly say that in the CPI numbers that we're seeing at the moment, most of the shocks that pushed up inflation over 2023 and 2022 have dissipated. But of course, as you mentioned, with geopolitical risks, there is, of course, I think a lot more that may potentially happen, but a lot of that hasn't materialized yet. And so I think the BoE is still quite confident in what they currently see in the numbers coming through.
Our director is very kind. He's given me 20 seconds. He doesn't know it, but he has. The gilt market as well. I mean, is it ripe to own at the moment, or actually do we need to hold off?
So I think in terms of gilts, we are definitely quite long the short end of gilts. So I think a lot of the discussions that we mentioned around cuts are very, very pertinent, but also because we think the BoE is likely to do more than what's priced into markets. Markets did shift following yesterday's meeting, but I don't think as much as we expect. So markets are still pricing between 2 to 3 cuts over the course of this year. We think 3 at minimum, and then over the course of 2025, we think they're likely to go
he
quite
said to me
further.
yesterday he's not afraid of doing it in an election as well, which I thought was interesting. He said it's his duty to do it. So nice to see you. Thanks again.
No, thank you for having me.
I know it's a bit of a shock for anyone, but you're very welcome on the show. So thank you very much indeed for joining us.
Thank you very much for having me.
Adegbem, who is economist over at Jefferies. And just to say, you can, if you're very, very excited, you can watch my whole interview with Andrew Bailey on CNBC.com. I know Karen's going to watch it.
Can't wait. Coming up on the show, attention turns to the EU as diplomats discuss who could hold the bloc's top jobs ahead of elections next month. Plus, we get results out of IAG at 8 CET, with the British Airways owner expected to have bounced back in the first quarter. And we'll be hearing from the Spanish Economy Minister, Carlos Cuerpo, as BBVA turns hostile in its approach on Sabadell.
Ambition to me is about doing better.
I think ambition creates a pathway.
The best advice I can give to someone starting off a career is don't have a career, have lots of careers, try loads of different things.
Talk to people and put your ambition out there.
I don't feel that I've hit peak ambition because it's a learning journey.
CNBC is where ambition meets opportunity. What does living ambitiously mean to you? Hear it from our CNBC anchors, reporters, and global business leaders on CNBC.com.
The European elections are less than a month away, but diplomats on the continent have already started negotiations on who will fill the EU's top unelected roles at the European Commission, Parliament and Council. Sylvia is here to talk us through it. Sylvia, I saw one titled The Dream Team, according to a diplomat, 4 women and names that we know.
Dream team, and there was a lot of actually focus on having women at the top for European jobs. However, I would say that for this election, that's not so much the concern, because you still have a lot of females at the top roles. You have Christine Lagarde still at the ECB, that's unlikely to change. She still has another 4 years in the mandate. But von der Leyen is expected to remain as president of the European Commission.
So this was spelled out by one diplomat, right?
Yeah.
Von der Leyen stays on.
Yeah.
You have Malta's Roberta Metsola at the post in Parliament still. Mette Frederiksen, the Prime Minister of Denmark, becoming president of the European Council. And Kaja Kallas, the Estonian PM, taking over as High Representative of the Union for Foreign Affairs and Security Policy. Are you saying that's unlikely to happen?
Half of that is very likely to happen. The other half, not so much. So for President of the European Council, because the poll suggests that the Socialist Party is likely to come in second, they're suggesting that that's going to go to a socialist member. And yes, the Danish Prime Minister is seen as a possibility there. But actually I heard from 3 sources that the former Prime Minister of Portugal, António Costa, is more likely at this stage to get that role simply, and I quote here, because he is seen as more socialist than her. He is not being charged with anything.
No, he hasn't been charged with anything. But he did resign.
Because
there was a government scandal.
There was corruption allegations
I'm not
involving
accusing
members
Antonio
of his
Costa,
team.
just for all say, I'm not accusing Antonio Costa of being guilty of anything. But why did he resign then if he didn't have to?
Because his name was mentioned in some of the conversations.
Yeah, but Sanchez's name has been mentioned and stuff, and he hasn't resigned.
Yeah, different choices there. Okay. And I believe that to some extent Pedro Sanchez looked at what happened in Portugal and was like, maybe I'll choose a different path.
I'm going to say something that you're going to both come back a bit. I'm going to say it for the sake of, I think it's an important debate to have. I am very proud when I see brilliant women in great jobs, like yourselves. You are fantastic, but you are great at what you do rather than you're women. I didn't see if you're a woman or not. I just see great people doing their job. Why did you both care so much that why is it important that it's a woman at the top rather than the best person at the top? This is such an important job. Isn't it important that we find the best woman or man for the top rather than that person being
100%. However, you have 4 key jobs that need to be divided. You need to think about gender equality and you need to think about geographical equality too. This is very much in the minds of officials as they are preparing for these European elections. And this is why Kaja Kallas, the Prime Minister of Estonia, is being mentioned as the potential next high rep. Because not because she's a woman, but because she's from Eastern Europe.
And I couldn't agree more. And like you, I've interviewed Kaja Kallas many times. I think she would have been a brilliant Secretary General of NATO. It doesn't look like she'll get that job as well, but I think she would be amazing in that role. She's been robust, she's great on foreign policy. I think she'd be brilliant in that role as well. Agreed. But when we're talking about the top job as well, why shouldn't we have a proper debate about whether it's von der Leyen or, I'm going to just say it, Mario Draghi? Because Mario Draghi is the outstanding candidate in many ways.
Well, it's signalling here. What, 25% of women make up the C-suite positions, right? And the signalling that sends to the corporate environment quite key when you've got positive discrimination perhaps happening.
But let's talk about Mario Draghi.
This job is
I love that conversation.
It's so important to have the right person, isn't it?
100%. But let's talk about Mario Draghi. Yes, he's seen as this key European policymaker. He's very liked everywhere in Europe. He would be very popular in the world with the European Commission.
He cares about the fact that he did a pretty good job over the ECB. He pretty much saved the euro as well. He pretty much saved Italy in many ways. He sorted out the Italian energy conundrum quite aggressively and quite quickly.
So yes, he's a good
really
name.
Good at what he does.
And this is why President Macron is floating the idea that he could become the next president of the European Commission. However, 3 people told me that he's only doing that, and Macron is only doing that because he wants to put pressure on von der Leyen to tell her your second mandate is not guaranteed, and that he also wants to keep some room for maneuver in the negotiations when they take place after the European elections. Brilliant. One source also told me, a very high-level source told me that at this stage Macron is keeping his cards very close to his chest, and it's worth remembering that in 2019 he was the head of state that basically chose the 4 key top jobs.
Let me just clarify.
So he plays a key role here.
We'll do this again because I think this is a brilliant debate. I would love if the top job is a woman. I agree with you about it's really important to have women in top jobs. I just think the top job, if it's not a woman, I want it to be the best candidate. I don't want it to be a political fudge. This is such an important role. It is de facto leader of Europe.
And she is very much liked in the European Council, so where you have all the heads of state.
Has she made some big mistakes historically in how she's dealt?
Forgotten. Are you talking about Ministry of Defense in Germany? I feel like that's
the Merkel administration failed on so many fronts as well.
Yeah.
On
but
its
then
geopolitical,
you look at her track record at the EU, and she had to deal with the pandemic shortly after getting this job. And achieving those next generation EU funds was quite significantly. Now the question is she going to change her tone for the next mandate? Because you have pressure from the far right. It's less likely that we're going to see a pro-green European Commission.
Can I ask you a question? We've got to move on, perhaps, but I'll ask you, let's do 20 seconds on this. Has her actions and the actions of the commissions led to the rise of the far right?
That's a very tough question to answer in 20 seconds.
I know it is. Have the failure of the centre led to the rise of the right?
To some extent, yes, and we've seen that in domestic politics too, right? And now you have to deal with that.
That's the point, is domestic politics has had a big role in what we're talking about with the rise of the far right. The people feel like they've been left out. So
100%.
Symbolically, but not necessarily responsible.
Very disconnected with what's happening in Brussels, and the officials in Brussels still fail to explain what they're doing and why is it important for people.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to CNBC.com or join us again on the show with me, Steve Sedgwick, and Karen Cho, weekdays on CNBC.